Now it is time for us to get started with trading. Before we get trading, we gotta pick the stocks you wanna actually trade with. So what I do, I go to finwiz.com, and over here I'm looking for active movers. Those are some of the best stocks for us to go and play with. What you want to do is to find a stock that has a big move up and down, but it is a big company. You don't want to go and trade penny stocks with options. The reason for that is quite simple. A penny stock has a very low float volume, and therefore the options themselves are not liquid enough for you to get rid of, especially if you're going to be trading a bunch of them at the same time. So this is not good for you to pick something like this. It's very unlikely you make anything out of it unless it goes exponentially up or down in one single day. And even that, it's going to be very hard for you to get rid of. So what I'm looking for is a stock. For example, Tesla is a big stock. Why is this one of the favorite stocks to trade? Well, it's quite simple. First of all, when you're looking at this, you want to see the move in a day, which is the true average range. Well, this one moves around 10 points a day, which is quite good. And this is just the average. Now, potentially if it goes way more than 10 points, it's even better. So you want to have a stock that is and doesn't have a very small market cap. So a big market cap is good, plus a big price swing during the day. A bigger price swing during the month is going to be exactly what you're looking for, such as this one. Look at this, 380 going all the way down to 310 within a very short period of time. And also it goes the other way around too, but it takes a little longer for it to climb up. Still, it gives us an opportunity to actually profit with the options, especially if we get the monthly options, which expire pretty quick. So you want to go and move those things as fast as you can up and down. Another thing that you have to do is pick other stocks. So for example, here is another one. This is Apple. This is a big stock that you can go and trade. This one also has substantial moves up and down. So you want to go into the monthly. So in a year, this is the trading range. It's actually at the higher end of its trading range. Next thing, we're looking at the weekly chart and try to find like a pattern. Eventually, what you're really trying to do is very simple. You want to profit and you want to pick tops and bottoms. And tops and bottoms are pretty hard to pick. But over here we have something that looks like very much like a triple top forming over here, and then it's going down. So something like this, when it starts to go down, you have an opportunity to profit when it goes back up again. So that's what you're trying to do. With Tesla, it's going to be a little bit more simple. So over here, $345 right now. Seemingly, this is the top of the training range. When you have a top of a training range, you want to actually time the bottom. So by timing the bottom, how do you do it? Well, market sold off right now in one day. Next day, it's probably going to go back up again, which actually usually happens after a big day like this of a sell-off. So you want to pick a big stock that you will be using. So let's go and pick one. So we have Google right here too, Facebook. Those are some huge companies that are very, very liquid, and you can definitely profit with them. If you're looking for something small that you can profit and those are not very liquid, well, here's one right here. It's called GoPro. This company been a huge loser in the past few months. So in this one, you're actually betting this company eventually will turn itself around. So after it been on the bottom for quite some time, look at this, it got sold off all the way to $5, and now it is $5.47. And potentially it could go back to 5 again. So we have like a 47-cent range. Maybe it's going to go under that as well. It can happen. We don't know what's going to happen in the future. All we're trying to do is try to bet where it's going to go eventually. And by placing the correct bet, we're going to be making money. If we place the wrong bet, we are going to lose. And since we only want to capitalize on a very small time frame of it moving up or down, and we want to sell off as fast as we can, we want to make sure that we get in at exactly the right time. In fact, the best trades I ever had was those that I did within one single day, when something in the news actually hit and I just bought something and then grabbed it when it went all the way down or all the way up exponentially. Then you just buy an option and you sell it pretty quick. You don't want to hang in there for too long, because the price only stays very good and you get a good paycheck in a very short period of time. After that, you actually are going to start losing. Maybe or maybe not, but most of the time, the longer you hang in to an option, the less likely you're going to make something, because 90% of all options expire worthless. So all we are doing is trading and playing with time, and we're just profiting in the journey, and that's it. You're not doing anything else or anything more than that. Let's get into our account. I have 0 positions at the moment because I'm not actually actively doing this anymore. But if I was going to do this, here is what I will be actually doing. Plus, I like to wait for a really good opportunity. I want to hit the ball, you know, like a home run. I don't want to go about and play just little games that's going to eventually just, you know, you lose commission, you lose time, and you don't make money. My favorite is actually swing trading. That's what I like to do. I love swing trading. It is swing trading. And that is the fastest way to make money over a pretty short period of time, but not too short. See, if everything is very, very short period of time, you're going to play it fast in, fast out, quick. And that's how you make your money or lose a lot. So you either win a lot or lose a lot by making quick decisions. If you're very good at it, you can make a huge amount of money. If you make a mistake, it's going to cost you a humongous amount of cash. But that's where the big money is at. If you put a lot in and you play the game pretty good, you'll be making a lot. And you also can lose a lot at the same exact time. It's all about how good of a player are you. At the same exact time, when you play swing trading, you have a longer time period. If you're willing to hold this for a few months, and even longer if you have to, eventually you will come on top if you do get the correct play. Now, if you're playing long-term, totally investing, this is not for you. Of course, this whole video is not for investing. It's more like swing trading, and especially for options trading, which is we are covering right now. So let's go into something to play right now. So GoPro. Now, unfortunately, this is a penny stock right here, and it's gonna have an earning coming out in 2 days. Now, it totally sold off right before the earning. So I actually expect this thing to either stay where it is to kill off all the option people who are betting it go up or down substantially, or of course it's gonna go higher. And the reason why they usually go higher after earnings is that all people made the bets and they're gonna try to short cover it. And during earning calls, I mean, a lot of people lose money because they just panic. The stock goes exponentially up or down, and then after hours, you know, rip off hours, that's what it is. I try not to touch this at all, unless of course you're the one who is selling the stuff in after hours. Anyways, let's get into the options. That's my favorite place. So this is a penny stock option that you can play here, and you can kind of figure out what it is, thinking what's going to happen with the earnings on February 2nd right here. And you can tell that most people are placing the bet that this is going to go flat at $5 right here. The biggest open interest is at 5. Second biggest open interest is 550. Everything else is kind of out of the money calls over here. So the ones who are thinking it's going to go bankrupt, there's a very small amount, but there is 160 people who are betting on this. Nevertheless, there's always somebody who's betting on something like this. On the other hand, somebody else is betting at $7 here, and those are out of the money options. Those are puts. So puts are betting against the stock. Calls are betting for the stock. And those calls right here, we don't have that many people betting on that. And the most expensive ones are going for 315. So the calls over here are trying to capitalize on all the way from 0 all the way to 100 over here. So those are the most expensive ones. On the other hand, with this one right here with the puts, where people are betting against the stock, the price here is not that great. So we have the price, which is the asking price right next to the price of the actual item itself, and it always puts it in here, and you can see it from both sides. So the calls right here, the most expensive 315, the puts are 167. Well, somebody betting on $7 and under, so you definitely can't go wrong by betting $7 and under. So anything that goes 7 and under, the guy who buys the $7 put is gonna win. The cheapest put here is $4 and under, and almost nobody is buying that one. So almost nobody thinks it's gonna go there. So if it does go there, it's very unlikely, but if it does, this guy is gonna really become rich if he buys enough of them. Most likely he's gonna come out with losing 100% of his investment in this, because those things are not investing. You can't invest in options. You're just going around the journey. So we have different months here. So February 2nd, February 9th, the more you go up in the future, the more expensive every one of those options is going to cost you. In fact, the higher up you go, and you can go a few years in the future too if you wanted to, this we are just going a few months, those option prices are going exponentially higher, along with the calls and the puts. And the ones that are the most valuable ones are the ones who are going to cost a lot more for you. And the ones that are least likely to happen are going to cost nearly nothing. Right now the volume is nearly dead because this is after hours. You can't really do much with this. So we have to move to something a little bit more active that might be active on after hours, such as Apple. So this one is also coming up with earnings, and they got really sold off before the earnings, which is good. Now you could bet for the stock to go up, which some people are doing, but then again, what happens if it totally goes below the actual price? So you're gonna lose a lot of money. So what people actually do is usually before the earnings, they will place a bet, either out of the money, one way or another. So let's check out what are the options telling us. So we have the February 2nd, which is the weekly option, probably one of the cheapest ones out there. Unfortunately, this is like the day of the earnings that it is coming out. So your better bet is probably the February 9th option. And of course, they're going to try to pin the price of this option in a way that it's going to hurt most option people who are holding this. So in other words, if you're buying the most popular one that everybody is trying to grab, you're very unlikely to hit it off. So you have to go a little bit off to the side with this one, because the computers always play against you, and they are a lot smarter than most humans. Just the way they play the game, they want to make most money, and those are programs that just play on like everything. They play on every single cent that goes in and out. The price is like perfect in some ways, if you really want to think about this way, because the computer, there's lots of people who are having computerized trading, where they go in there, and those are mega corporations, not like small people who are retailing, who are trying to do this at your house. They're actually having those mega computers that are doing all those big trades for them by a special program that reads everything. It reads the whole way of those patterns and everything else and plays against everyone else. And this is why it's so hard for you to predict where it's going to go. So if you're going for something super short, it's going to be pretty hard for you to actually win this, but it's going to actually be a lot more expensive to go in the future. So let's take a look at something here. So we have a bunch of bids here for, and let's say that we are going to go and bid against Apple. Bidding against, which is going to be buying a put. So buying a put, we have a few choices for us to pick from. So we have the strike price. So we're trying to find out what the strike price is going to be, and those are in the money. And if you press on this, it shows you the in the money ones, and all the in the money are the blue ones. The white ones are out of the money and very unlikely to actually hit it off. So here is the put right here, and we have the different prices that we have here. So the best ones, of course, would be $175, which means that if it goes 175 and below, anything below that, and if it goes all the way to like 50, you make 100% of the money on it. Of course, this is the most expensive put out there because you're actually taking a lot of the price value, which is above the actual sticker price of the site. Of course, you can go way higher if you wanted to, but it's going to cost you even more money. On the other hand, the 160 strike price, which is under this price that's going right now, which means there is only 6 points difference. If it never actually goes under that price, you're not going to make anything whatsoever. You're going to lose 100% of your investment in those options if you pick the wrong one. Therefore, what some people actually like to do is to go a little bit in the future and buy those puts instead, but the price exponentially goes higher. So the more higher up you go in the future, the more likely you're going to be paying a lot more price for those options. But the secret here is not that. What we are trying to do is instead just play the game and play the difference. And my favorite stock to play this game is of course Tesla. This one is more liquid, more likely that it's going to have a drastic move up and down. You want to actually play it a little bit before its earning call, because that's when it's going to exponentially drop or go up around that specific month, so you can get a very good price for this. So what you do is you have to go in. So what you do, you have to go in FinViz, type in Tesla, and you want to find out when its earning is actually coming out. Sometimes it's going to say somewhere over here in the news. At other times, what you have to do is to go into the company website. Just press on Tesla Inc. right here, and then try to find out when its earning is actually coming out. So in this one, you're going all the way in the bottom, and sometimes it's pretty hard to find it. In this one, they really don't want you to go in that much of investing. It's more like they want you to go in and buy the actual product. So it's really hidden somewhere in here. You have to go in there, and here we go. Press on investing, and over here you get investing information. So one thing you want to do is to take a look at as much information as you can about the investing, which upcoming events are coming, when is the earning, which is February 7th. Here we go, we found the earning call, and plus we can read about previous earnings here as well, which I totally recommend for you to do in order to figure out where this stock is actually heading. And by downloading and reading the previous quarter and the one before that, you will get a good feel where is it gonna head in the future. So that's one thing I do suggest for you to do. So the previous earning right here, November 1st, you can read the whole thing here. Just press on this and it tells you everything about the earning. You can even listen to it if you want to. It's super boring. Most of them are boring, not interesting. It's like maybe 2 hours, maybe longer. I have no idea how long this one is, but it's gonna make you a lot of money by listening and figuring out where it's gonna go in the future. Then, and plus, you're gonna figure out if new product is gonna get released. Maybe they're gonna hint about something. Maybe you're gonna say something about something, and you're gonna be a little bit ahead of the game. So that's where you get the official information from. So after you do this, next step for you to do is to play the correct option. So February 9th would be the option we want to play, and that's because the earning is coming out around that time. And we already looked in here. February 7th is the earning, which means that February 9th is 2 days after, and that's the play that we want to play. So next thing we want to figure out what we want to play here, the call or the put. So what do we want to bet? And do we want to bet against the company or for the company? Against would be buying puts, for the company would be buying calls. So let's say, for example, they totally messed up, and in this quarter they didn't hit the results, everything is delayed and stuff like that, and maybe in the earnings, which is going to come up in a week or so, it's going to go and drop like 70 points in a day. So you want to go and buy something. So we have different strike prices for us to pick from. Strike price of the strike price of 337 and 352. But those are expensive. Look at this, 16 bucks to bid for this one, 9 bucks for just one piece of that one. Let's just press on one of them. So this specific strike price right here that we have here, and we can only look for what we want, which is what we want to actually buy. And those are the symbols. And we are trying to do the correct price for us to play with. So let's go and pick the one we want to actually trade. I'll press on trade right here. This one has the most open interest to it. And it gets us to the put right here, the actual put that we want to grab. So now we have a bunch of menu that we can pick what we want to get, and we are buying to open. So we have to buy to open. You don't want to buy anything else here. Buy to close is to close the option once you already have it. So to grab it, we are selecting one. We're selecting the date that we want, which is going to be February 9th. We're selecting the price that we want to bet. And the bigger the price, the higher up that we go. For example, if we want to bet the biggest bet out there, which is 450 all the way down to 0, it's exponentially expensive. Look, there's 103 bucks for just one piece. And this one piece is going to cost me $10,000. That's how expensive that one piece actually is. On the other hand, if you play in the money, which is 345, let's go into 345 right here. Over here, the price for that is only, let's see, it's about 12 bucks. So the limit price would be 12.8. Big difference, huge difference, from 10,000 to 1,000 bucks. But if you really want to make some decent money on those things, by paying 1,000 bucks for this, you're not going to make this much money. But I mean, you will, but you potentially can lose 1,000 bucks in this whole thing too. Let's say, for example, it drops to 290. This is out of the money. Very unlikely to happen, but if it does, why don't you just go and play this instead? So let's play it to 290. 290 right here is going to be super cheap. Look at this, 0.81 right there. 86 bucks. Look how exponentially cheaper something like this is. So instead of buying one, you can buy 10. Well, you can even buy 100 if you wanted to, but that's like 8,000 bucks. Huge bet that this company goes under 290 in 1 week period of time. And this is too much of a gamble for me. But look at this, 86 bucks. This thing drops below 290. In the next week, Is it possible? Can it happen? Yeah, well, it can. We don't know this. Now, you can buy just one put betting for this company to drop this much. On the other hand, if you want to spread another one of your bets in here as well, why don't you just bet the other way around? And let's say this company hits the home run with this, and this stock goes up 100 points in a day. Well, I mean, not a day, but a few days. Very unlikely, but let's say it goes over 400. It's more likely for it to go over 400 in a few days than it's going to go any other way around. In fact, with the way Wall Street actually works, it's very likely to hit as close to 400, but never actually touch 400 itself. And this bet is just exponentially cheap. Look at this, almost nothing. The chances of this actually happening, they don't think it's pretty high, so the price is super cheap. But on the other hand, if it does touch this, you will see the price going from all the way from 1 cent all the way to $10 or even higher. And therefore, if you bought one, you are not going to make this much. You bought 10, you're going to make more. 100, you might actually make substantial amount of money. And I will show you exactly what I mean here. If this actually does happen, this is like a super gamble that you're making here too. So this is how much we spent here. But the amount of money that we can potentially make here, if this bid actually happens with this strike price, well, it's 100 times that. And since we have 100 of those pieces in here, and it goes up by 10, this is some whooping amount of cash that potentially it can actually do. 56 here, maybe $15,000 potential if it actually goes through, if this actually happens in the very, very unlikely chances that it does. This $156 can turn to an exponential amount of money. Of course, most likely this is going to just become zero. Most of the time those out of the money calls disappear. Now what you're trying to do instead is just play the game, which is if the price goes up, and it might go up for the next few hours, the next few days, but right before the earnings sometimes it goes up and down. If it goes a lot higher, and this bid right here from 1 cent goes to 2 cents, 10 cents, the price of it goes all the way to around 1,000 if this thing goes out of this range. And therefore, you'll be making some substantial amount of cash here. And you can just get out of it before the option actually expires. So that's how you play this game. You're buying this, you're playing it for a very short amount of time, and you get out of it as soon as you hit a good profit. If you stay for too long, you're going to lose everything, because most likely it will never touch those out of the money strikes. And you're really trying to play the out of the money strikes whenever you can. The better ones are more advanced in the future. This is the February 2nd one, which is a few days from now, very unlikely to happen. February 9th would be more of the strike price I'll be actually playing if I wanted to play the earnings right here. February 16th, I'm not too sure about that one. This is a lot higher up in the future. So February 9th, you have a lot shorter period of time here, and then you're picking the price to play, which is $395 here. And this one cost us 86 cents to play the game. There we go, 86 cents. Look at this, a whooping $8,000. Well, you know why? Because I got 100 of those. For $1, it's only 91 bucks to play this game, to play the call. So the call here with the strike price of 395. Now you can also buy the put, and with the put itself you want to increase this exponentially higher, and there is more likely for you to get profit the higher you go, but of course the price is going to go up as well. So there you have it. Those are the ways that you can play this game and make some substantial money in the process. And of course you can lose everything as well. So what I suggest for you to do when you're just starting out playing this game, stimulate the cash, and before you go and play with real cash, if you are playing with real ones, don't get too greedy. Keep the options that you're playing very, very cheap. So if you're playing, I mean, if you're gonna go and play this, play one option and try to play cheaper games. So 50 bucks and under, until you figure this out. It's gonna take you a while before you get very, very good at this. And the more up in the future that you play, the more expensive it is and the less fluid those options actually are. So in the future, if you're getting those, betting the company is going to go substantially higher or substantially lower, the more option that you're getting over there, less likely somebody is going to play those options. It's going to be so much harder for you to sell that option when you want to get rid of it. Therefore, you want to have the most liquid options that are available, which are the most recent ones in a very recent stock that everybody is playing, such as Tesla.